if you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with switch markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Getting started in trading shouldn't be complicated. You can open an account, get set up, and be ready to go pretty quickly. Now, if you've been thinking about it, take a look. Click the link in the description below. You can even start with a free demo account.
In trading, like climbing, the hardest step is to pause, hold, and trust your position. Ambition pulls you forward. Focus keeps you steady. Together, they take you higher. Bring your ambition into focus. Switch Markets.
Already trading with another broker? Fair enough. But if you haven't looked around lately, you might be missing out. Now, Switch Markets is picking up awards, offering tools most brokers don't, and their support actually shows up. It might be time for you to switch to Switch Markets. Click the link in the description below to get started today.
Discipline starts before the first punch is thrown. Focus sharpens in silence. Repetition builds control. Every movement prepares you for the fight ahead. Trading isn't luck. It's preparation. It's grit. Your fight is won long before the bell even rings. Champions trade with Switch Markets. It's time to bring your ambition into focus.
Are you still with the same broker? Now, there are better options out there. There's more tools, better support, and a platform built for traders. It's time that you demand more from your broker. Take a look at Switch Markets. Welcome back to the Trading Room. I'm Shain Vernier, and this is the U.S. Mid-Session Brief. Today, it's a Tuesday strategy session. We're going to go through a few trade ideas. We're going to execute some live trades. We've got a few things going on the market profile that are pretty good. It looks to me like we're going to execute at least one or two today. WTI crude oil back up above 85. Trump threatening to bomb Oman. I mean, what wild times, right? Tuesday, Wednesday, Thursday. I absolutely love to be in the market at this point. This is when they are most active. This is when we trade. Mondays for prep, Fridays for preservation, Monday, Tuesday, Wednesdays for chasing the brass ring, and that's exactly what we're going to do today. So we got a dollar-yen trade idea that I'm going to stress once again. We've got DXY, we've got XAU, USD, sort of coming into a buy zone right now. Then we've also got gold futures where we may be able to pick off a rare midday TPO price chart trade. So I want to welcome everybody back to the trading room. It's going to be a lot of fun. Let's see. Good to see everybody in the How to Trade action. Tuku, Ralph H., good to see you. Ralph, welcome. Had a great conversation with the trader earlier today. Talked a little shop. It's always good to visit and really get caught up on how everybody's doing and what they want to do in the live market. Some of the questions that I've got over the past 24 to 36 hours have been fantastic. Keep them coming, guys. Ask me whatever you want. Couple of rules on this stream. You know, if it makes money, it's the right answer. And number two is I won't BS you. If I don't know, I will tell you that I don't know. Got faced with a question earlier today about lot size on the US 30 when we couple that with the exact leverage we're trying to apply with our trading account. And it was a very, very involved discussion. And I had to sit back and do a little math in my head. And I go, yeah, how does that work? So if you have any questions at all, be sure to ask. And if I don't know, I think we can figure them out. I can help you figure them out and maybe turn over the right rock. All right, here we go. Let's go ahead and get started. Tuesday strategy session. Very, very fun day to trade. I've always loved Tuesdays. Historically, Tuesdays and Thursdays have sort of been my jam. I've loved those. Wednesday can be very good too, though. Challenging, though. Tomorrow's going to be real challenging. I'm going to talk about that as well, and that is going to be with your FOMC minutes release. Trade idea, U.S. dollar, Japanese yen. This one's still sort of, I would say it's on the back burner, sort of simmering, waiting for a nice big break. I'm optimistic we may get it during that FOMC minutes. I want to sell right up there in front of 62%, 160.49-ish. Would be a pretty good area. I think that'd be a pretty good level. You'll notice the big intervention from the Bank of Japan and the United States propped up the yen, and it's just sort of a slow bleed, and that's been the story of the yen for a long time. So as I watch this price action unfold, 62% right up there around 160, 61. I believe our hot level, our key zone is going to be somewhere right around that 160.49 level. And essentially that would be your sell limit order. I'm maybe watching this one closely. I know we're a little bit off the pace, trading 159.58 right now on that dollar yen. Only about 100 pips. FOMC minutes tomorrow. We'll have a decent opportunity potentially to pick that one off. I think we'll get it. I really do. I think we'll get it. This is fascinating. This week on our market analysis video that we put out over there on the Switch Markets YouTube channel, I also reposted on Shain V_trader on X. Feel free to follow me there. But what you have is some short-term analysis, and the concept was simple. It's like, Shain, you're always putting out weekly, dailies, monthly levels, and a lot of intraday traders are like, that stuff sort of bores me. And I said, yeah, I know, but you need to know where it is. We decided to go short term this week and put out a 1 hour, a 4 hour, and a daily. This was the 1 hour look at the DXY. This was in the market analysis video that came out shortly before the London session. If you missed it today, be sure to head on over to Switch Markets and check it out on YouTube. 1, 2, 3. Now, we made a video a while back. It was about trendline reversals. This is a popular way to trade. A lot of traders really like to play this way. A few are very, very popular, and you've probably seen them online if you're in the online trading space. And one of their big strategies was a trendline reversal. To me, trend lines, I see them in a little bit different light, but still the concept's relatively similar. U.S. dollar index 1 hour chart. CPI gave you a nice big bump, and sort of there was the top of our trend. So there was your 1, there was your 2. That's when we come up and sort of set up that, not necessarily a swing high or a swing low, but that second touch point. Now remember, a trend is 1 or 2 points, right? Well, it's got to be 2 points. It can't be 1 point. 1 point is probably just a horizontal line. Some say that's just a zero trend. Gosh, I'm getting sidetracked already, but 1 right there. So that's a top, and 2. I always see a trend as, hey, we got to have an anchor point and then a second touch, and then it's all about the third touch. What happens on the third touch? So we had number 3 down here. So we had a nice trend line, 3 rallies, boom, boom. And then you see a little bit of a pullback, and now we've broken above that zone. And if you do extend that trend line, it's not going to be perfect, but if you do extend it a little bit, you see it sort of pulled back into that area. You kind of have to be short-term, a little bit bullish here for the U.S. dollar going into tomorrow's FOMC meetings. FOMC minutes Let me go ahead and get that out and say that one 3 times. Bobby Bob, good to see you, Bobby. Welcome, Joshua. Good to see you, Joshua Chung. Always a pleasure, Josh. The big thing that we have here, though, probably shifting gears to bullish. So do you want to be long? Well, I mean, if you were to take a long from here, I don't necessarily hate it. I could say, okay, if you want to buy the DXY right now, okay, buy it right there. Stop out has to be probably somewhere down there. I think that's a decent trade, looking for somewhere up in there. That's not a bad trade. It really isn't a bad trade. It's low risk. You're not placing a ton of faith in this thing just because trend lines, although they can be very, very good, they also can be a challenge to trade just because we need a catalyst to move price. And a lot of times what happens on a trend line is price just sort of flattens out and goes sideways. That's exactly what you're seeing in the DXY. However, you are above that trend line, so it is broken. This would be sort of a reversal. We had a bearish trend. Now we're starting to see a bullish reversal. See exactly how that develops here in the near term. This is another one, 4-hour chart. This is from our video, Golden Cross right there. This is gold, spot gold, XAU, USD. I know most of you trade this, and if you're not, you're probably thinking about getting involved. You can see right there, Golden Cross, 4-hour chart. That's a bullish trend. That's a bullish trend. It's not a spike. It's not going vertical. We're not talking about climbing mountains here, but what we are talking about is that sort of stairway to heaven, the slow grind, and there it is. So our support zone right there, we talked about this being a potential support zone. The swing low right there, right down around, 43.11, and then we talked a lot about this support zone right here, which is the 50 SMA on the 4-hour chart. Relatively strong. So you can see we're testing that zone right now. My guess is we're going to break and close. I would probably be a little bit bullish from this area. A little bit bullish, 43.65-ish. Where exactly is our 50-period 4-hour? 43.64. Is that a trade we want to take? It's a Tuesday. We're right in the neighborhood. It's higher risk. No question about it. It's a little bit higher risk. Let's dial in. Okay, $1 a tick. This could be a particularly expensive trade. Let's go ahead and send them long market, and let's monitor this trade and see exactly what happens to us on this live stream. Now, 4-hour chart, the reason why we're buying this right now is because we're right on that 50-period SMA. Now, I couldn't have really drawn up this price action really any better. Tuesday, mid-session, mid to late session, we should get some accumulation and a grind north. We really should. I would be surprised if we don't make any money on this trade, but this is more of a short-term position. This is a trade that we would take. I'm looking for somewhere right in that zone, and we're going to manage this in real time as the stream goes on. But right now, let's go ahead and let's throw this down, maybe looking for 79. Even that's a little bit too ambitious for me. Let's bring this right down to maybe 74. Maybe we'll look for a nice 920 here. I think we have an opportunity to get this. I think the worst of it's over for gold today. However, let's go ahead and wait and see how it pans out. Now, where would my stop loss be on something like this? Stop loss is going to be a little bit tricky. It's going to be a little bit tricky. We're going to have to actually watch this thing play out. Right now, we're just seeing noise. All you're seeing is noise. The DOM's going back and forth. You're up, you're down, you're up, you're down. Who really cares? What we need to do is figure out what's happening on the smaller market structure. Right there is sort of the game. 30-minute chart. Okay, boom, right in this zone. What are we looking for? Well, we're looking for an interesting type of a dynamic. We're looking for this market essentially to break up. Where would we have to stop ourselves out at? Potentially down there. I don't believe we'll get there. If we want to play real tight, I could probably stop myself out right there, somewhere right around 62, maybe. But if we're going to do that, then I could probably bring this way down. Let's take a position. Let's manage it and just see what happens. Very, very quiet right now. Feel pretty good about it. Not really too concerned about this trending. This is exactly what we wanted. So when we step back to that 4-hour chart and all that analysis that went into that market analytics video, this is exactly what we wanted. This is the scenario we wanted. Big penetration beneath, bounce back up above the level, quiet period, roll into the late day. If we get swept out, we get swept out. We're going to manage it on the fly, though. That's for sure. All right, let me see. We have a question here. I don't want to get too far behind on my live chat. I have a tendency to do that. I don't like having to go back and answer questions that are like an hour old. Let me see. 1906, Ms. Good to see you, Ms. Welcome. Good afternoon, Shain. I hope you're well, my friend. Please tell me what the heck is going on with the Australian dollar, US dollar. Well, it's all over the map, right? I know the RBA is hawkish on rates, and we have the dollar weakness. Why is this pullback so long? It's a great question. Let's go ahead and pull up the Aussie. I love the Aussie. Trading the Aussie is always a lot of fun. Remember, what is a key market driver of the Australian dollar? RBA number one. You nailed that one, Miz. Don't overlook commodities. What's going on with commodities right now? Gold. Gold's down a little bit, right? Gold's been all over the map, though. Dollar tanked, gold went up. That damn sure had an impact on the Australian dollar. So let's go ahead and let's step in here and see exactly what we have with regards to our Australian dollar. All right, we're still looking at that yen. Let's cursor over, see what we've got. Daily chart right here. All right, so we're, couple of things, couple of observations just looking at this daily. Okay, that's a significant move, of course. That's a big move. And sort of the grind back, the buyback. What are we seeing, though, as far as price action today? Off about 0.25%. Something like that. Are we looking to buy it or sell it? It's tough. You have an inside day brewing here. It's tough. What do you want to do with it? I talked a little bit earlier when I was on a one-on-one with the trader from earlier about range trading and talking about playing the middle. A lot of traders have played the middle. They took the short today. They put their backs against yesterday's high, and now they're playing that right down into the guts, right? 62% down there at 70.66. That would be an attractive buy for me, probably for about 25 points, 20 points. You have a tight spread right now, somewhere right around a pip and a half, so a 20-pip trade's not a bad idea. A deeper retracement to 78, that might be okay. As far as what exactly is going on with it, it looks relatively calm. In my view, you're working on an inside day, which can be a challenge. I would definitely have yesterday's low marked on my chart, 70.80, somewhere in that zone. Probably going to catch some bidders there. But if you do wash that out, then more than likely you're going to test 75 to the downside. I would be sort of interested to see exactly how this thing pans out. You're in rotation. I'm watching gold out of the corner of my eye. Gold looks to me like it wants to continue to the downside, but it is in rotation right around that moving average. If gold rallies, that's going to bring a little bit of heat to the Aussie, especially if it rallies from this area. But if it does sell off and it does tank, then you're probably going to see this Aussie US dollar come down a bit. Now, the US dollar's flatlining, so we're seeing a lot of chop across the Forex. So for me, I probably wouldn't want to be in the market right now unless I was holding shorts. And the reason why I'd be holding shorts is because gold's down a little bit, and then also you have this sort of the spike high that you could hang your hat on and feel decent about. Now, what we have right here, down here, 62% is about 70, 75-ish, somewhere in that area. That's a better buy for me, only for a scalp. Now, as far as like intraday action, we could do something like this and say, okay, we're coming off. Clearly, we're coming off. That really began during that U.S. session, that opening bell ding, and my guess is it has everything to do with the gold correlation. Everything to do with the gold correlation. So I would be watching metals, 1906 Ms. If you're trading gold right now, I'd be having one eye on my gold chart and another eye on my metals chart. You want to see that XAU USD rally, not just because we just bought it, but you want to see that because it's going to help out the Australian dollar. Remember, commodity dollars are big deal. Big deal. I love trading them. Aussie's fun. Canadian dollar is always fun. The Aussie CAD is fun. And remember, when it comes to the Australian dollar, gold, not silver so much, iron ore and copper. Those are biggies for the Australian dollar. Interesting levels, though. As far as what would I be doing today, I'll be on my hands probably until 70, 75, somewhere in there. I think that could be the play. All right, let's go ahead and take a look at that Aussie CAD. I haven't looked at this one in a long time, a very long time, which is a shame because it's a great market. There's only so many hours in the day, though, right? Okay, daily chart. Daily chart somewhere right in there. Market's very flat. Aussie CAD, right? So we're looking for a breakout, something that we really need to get going. I'm seeing the gold. The action in gold is really kicking up right now. I'm watching that out of the corner of my eye. Little bit of negative action, and now we're bouncing back to the positive. Sorry, I'm thinking out loud, but sort of this is how to trade. I'm always looking at everything. Plus 92, plus. We're going to be looking at probably a plus 300 or 400, maybe 500 on that trade, and then we'll pull the plug on it. But I want to see what happens. Okay, Aussie CAD daily, flatline. Absolute flatline. The beauty of this is you've got WTI crude oil going against gold, WTI crude and natural gas drive the Canadian dollar, gold and silver, copper and iron ore drive the Australian dollar. And what do you have? Well, you have an interesting type of a dynamic here. You have a top side, my Bollinger Band on the top, my downside. I would be playing rotation in this market. Daily rotation. Look how tight the Bollinger Bands are. Look how they're parallel. They're tightening up. This screams rotational trade. Looking at not severe, but serious topside resistance right there about 98, 93. I would enjoy the opportunity to sell 99s and sort of sink my teeth into that. I think that would be a great way to trade. And then also to the downside, if I wanted to buy my lower Bollinger Band, 97, 98, beautiful, guys. The roadmap for this pair is a beautiful thing. What is it? Selling 99s, buying 98s. Sometimes simple's good. Profit target's somewhere in the middle. Look for 30 or 40, maybe 50 pips to the middle, and you're going to be in great shape. Okay, let's go back to our gold trade. You can see life is starting to look pretty good for us. We've turned the corner. We're up about $229. We're starting to get a little bit of a push here towards the top side. What can we do now? Remember yesterday when I talk about playing for cash, what can we do? We only walked away up $15 yesterday. That was not good. Right now, we can walk away up $214, $215, and we'll have an opportunity potentially to be up a couple $100 on the week. Is it a good trade? Is it a good play? I don't think it's a bad play. I think you can get away with it. The problem is we've waited for that SMA to come into play for so long, and the market's starting to go our way and turn the corner, and now it's coming down a little bit. What I'm trying to say is this. When you're leveraged and trading leveraged assets, a lot of times those dollar signs are going to look so important. But look what's happened with price. Absolutely nothing. Absolutely nothing. Absolutely nothing. This, I would definitely consider this noise, and the fact that we were just up 200 and now we're basically back down to scratch is just a function of leverage. Don't get caught up in the noise. Don't get caught up in the noise. Was the money there? Could we have taken it? Yes. Is there more in this trade to the top side? Yes. If we get a solid rush, we break above the previous 30-minute bars high, we're going to get paid off more than likely. The question is do we want to hang in there and do we want to take the risk? It's Tuesday. I have no problem taking risk on Tuesday. Monday, we would have taken the money. Friday, depends on where we were for the week. We might have needed it to buy a sandwich or something and feed ourselves over the weekend. So we're going to let that one twist. We're going to see exactly how it goes. Why? Day of the week psychology and the position that we're in. I do want to sort of apologize for my throat in advance. I don't know what's going on. Been fighting a little bit of a cold. Feel pretty good today, though. But it's been sort of hanging on. I guess all the stress of moving, travel, moving, property deals, trading, trying to talk for an hour a day has definitely brought it in. This voice right here, it's usually pretty deep. It is deep today. So I do apologize if that's throwing you a little bit. It's unintentional, but it's sort of the best that we can do. Let's take a look at gold futures here really quick and see exactly what we've got cooking. I like the formation. It definitely is intraday bearish formation, though. We are going against the trend here, but I do like this compression right here. I like this compression right here. I think we have an opportunity potentially to see this market move higher. However, we are also ready for a rug pull and ready for this thing to fall away. If it does fall away, we'll bail out and take a loss. We will. But this right here, we got a shot. Why do I say that? Couple of things, couple of observations. Very briefly, on the futures market, you can see this value area is sort of setting up. This is the point of control, and that is the value area up there. This chain, what we call it a chain, is very thin. Not a lot of volume was traded in this area. What does that mean? It means that if we catch a bid and break this market symmetry, more than likely we're going to rotate higher. Now, I understand that that is the futures market, but it does sort of represent where the spot market is to a certain degree. It's a good illustration of the market structure. So if we do break higher, we're probably going to get paid off. I know it's simple, but right now it's starting to go against us a little bit. But honestly, nothing's really happened yet. Gold can be a challenge to trade this time of day. Should we have taken the 240? Well, we're down 100 now. Should we? Well, maybe. Let's go ahead and let it twist and see what happens towards the end of the stream. We'll check back in, or I'll show it if it's getting really bad. Right now we're down about 125, 115. Just rotation back down to this late day point of control. This area right here, if we do break and start going down, that means we will get a rally out of the U.S. dollar. More than likely, the dollar will, for some reason, get stronger and force us down a little bit. We'll just wait and see. Wait and see how exactly this pans out. All right, let's see. I got another question here. Man, that voice is deteriorating rapidly. Kamal, thank you for another great live session. Your dedication to teaching and helping traders grow is appreciated. May we all keep improving. I tell you what, I sure appreciate that. I got some great compliments over the past several days on that, and it's my pleasure being here. It's always tough to be away for a little while because you don't really know. It's always tough to break your flow in the markets. See, right now the gold trade's starting to get away from us. We're down about 250, somewhere in that zone. So I'm watching the market symmetry closely. We'll get back to that in a second. I don't believe we're knocked out of it yet. We're willing to take a little bit of a draw on this trade, but I'm not going to let this thing trend down against us. We should get a rebound here and trade back up at least to 425. We'll wait and see. It doesn't look good right now, though, right? It's just testing our metal. All right. Trade idea for the U.S. dollar, Japanese yen. I really like that one. Week 34, 2026. This is sort of what we're looking at for our fundamentals today. U.S. Treasury auctions was Monday. That was nothing. Housing starts and home sales. That's what I'm going to cover today. Also going to check in on the Iran war and sort of give you an update on some headlines that we just can't believe. Frankly, I can't believe them. We can't believe what's happened in the last couple of hours, let alone the couple of days. The statements coming out of the White House are unbelievable, but that shouldn't really surprise anybody. It's either good nor bad. It just has brought some volatility to the crude oil market. That's basically what we're going to talk about here. Housing starts and home sales, not a huge number anymore, but I do want to talk about housing starts and how those higher interest rates are having an impact. And then also Wednesday, tomorrow, UK CPI, FOMC minutes. If you're trading the pound tomorrow, be very careful. UK CPI is a big deal. It will shake the pound up. And also the FOMC minutes release. One of our biggest economic events. For some reason, everybody loves the minutes. I'll tune in. We'll probably trade that one for a few hours. We'll sit down and maybe go over a few of our expectations, potentially spot some trade ideas, and take any and all questions that you may have. Thursday, Philly Fed jobless claims. Philly Fed used to be a huge deal. It's not really much anymore, but we're going to cover it just the same. That'll be a lot of fun. Friday, wide open economic calendar, not really much going on. Tuesday through Thursday, psychology. Primary objectives to hit our P&L goal. It's pedal to the metal. It's all systems go. If you're going to take risk, in my view, this is the best time to take it. This is when you're going to get the deepest markets, the most liquidity, and the best opportunity to succeed. Focus on your execution. If you see a trade that you like in our gold, button up against that 50 SMA, well, let's take a look at it. Let's see exactly what we can do potentially to profit from it. We'll focus on our execution. Of course, cash in on opportunity. If our strategy says trade it, we trade it. We don't question it on Tuesday, Wednesday, Thursday. Ride the momentum. We're looking for profits. We're looking to hit our goals and build our accounts. All right. A couple of things we need to start with here. Excuse me. Voice is definitely kicking out on me. Let me see. Packham. Hey, Shane, do you listen to country music while you trade? No. I don't. Okay. Good question, though. Good question. Before we get to our fundamentals of the day, Packham. Okay. Country music. No, I don't listen to country music while I trade. You guys will never guess what I listen to while I'm trading. I used to when I was young, it was all about, lifting weights, hit the gym, be very intense. I was trying to be an athlete in the markets. I was a baseball player, and I wanted to be the most intense trader in the world. So I was in there listening to heavy metal and things like that, just getting pumped up to trade, drinking 5 or 6 coffees a session. And okay, that doesn't work long term. That doesn't work for me. I'm listening to easy listening. I'm listening to soft techno, deep beat house, listening to a lot of house music. Lo-fi hip-hop, a lot of that. What I like to stay out of is I don't like sitting around listening to people sing. I'm not listening to singers. I'm listening to instrumentals. Some days it's classical. Sometimes it's classical, although that can really grate on your psyche. But for me, probably lo-fi, like deep house is pretty good. There's some jazz, slower jazz. That's pretty good too. But yeah, techno, I even like techno. As long as it's not too fast and too aggressive. Country music, I can't do it because my favorite country guys and gals, they're all singers. And last thing I want to do is listen to somebody singing to me and changing my emotions while I'm trying to make decisions. Took me a long time to learn that. That's a great question, Packup. Thanks for asking. All right, guys, let's go ahead and cover our fundamentals of the day. My voice is going downhill directly. Very, very small. I can't really read much of that. Maybe you can, but housing starts. That's the big one I want to focus on. The rest of it, import price index, building permits. Building permits were up a little bit. That's just people pulling permits, expecting lower interest rates in the future. Don't put much stock into that. Month over month, 5% gain. That's fine. Industrial production, never really cared at all about industrial production. Those numbers are included in your GDP. That's where we find those and care about those. Pending home sales is interesting. Pending is deals that are underway, down about 2.3%. I don't believe we have a new home sales number. That's later this week. Housing starts is going to be our key. Jeez. Housing starts is going to be our key figure today, down 12.4% month over month for July. Absolutely horrible. I mean, absolutely horrible. Housing starts in the U.S. dropped by 12.4% from the previous month to a seasonally adjusted annualized rate of 1.239 units in July. This is important because the summertime is a huge construction season here in the United States. Now, if you're down south, construction never stops. But if you're up north like I am, or in the Midwest, construction grinds to a halt in the deep fall and winter months. So in the summer, it's all systems go, pedals to the metal. To see this kind of drop is very instructive in that those higher interest rates are beginning to bite. No question about it. not year over year, but this is your last year's stats. Look at where we were last July. Now you got a war going. You got higher costs for pretty much everything. What do you got here? Pretty good boom in March, right? Everybody was getting ready in the spring for those lower interest rates. The war wasn't on really yet. Then it kicks off, and then you can see exactly what's happened to your housing starts. So challenging. 10 years, though, is it really that big of a deal? No. 10 years of history numbers? No, not really. Right here, though, last year, yeah, kind of is a big deal. All right, let's get back on over to our gold trade. Yeah, starting off, we're down about 100. I've been watching this thing oscillate out of the corner of my eye. I personally think that we're in decent shape to get a bump to the top side. I like the fact that our SMA is there, but think about this. Let's back up to our 4-hour, 50-period SMA. This is what we covered in the market update that we put out on Switch Markets YouTube channel for the week. What typically tends to happen around averages? Think about it. You're right around a moving average. What really happens there? The market gets choppy. Why? Because averages, right? Think about it. You're trading near the average. That means there's buyers and sellers involved, right? Yeah. But when you have a good market read, like we do here, it's just a question of how much time we're going to give this thing to play out. Bullish trend is correct. There was your golden cross here. Bullish trend here. Pull back here. Didn't quite get it. Now we're starting to get a little love here. We've got 33 minutes left in this 4-hour bar. The trade from here would become relatively simple. Now, if we don't get a kick in the next few minutes, which more than likely we won't, I mean, there's not much volume in this time of day trading gold. After the London-U.S. overlap, going into the late session, a lot of players are taking money off. Very few are going to take new positions ahead of the Japanese Open. So you're looking at something like this going, how should I manage this trade? I have a happy number in my head. I think that if we get a kick and we're up, say, $500 or so, we take the money there. If we don't, and we sort of trade near flat, which it looks like it's going to happen, then we're going to have to make a decision. And the question is do you put your stop loss down here and try that position to the long side going into the Japanese session? It's a pretty strong argument to say, yeah, you do, but it's a question of how much risk do you want to assume. For me right here, this kind of risk, this period, Tuesday, Wednesday, Thursday, I would probably say, yeah, you go with it, but it's going to be a minimum of a 1-to-1 payoff. But look at what's happening to price right now. I mean, this guy's is boring. For lack of a better term, I mean, this is boring. So, I mean, we're sitting here, I'm watching the ticker go back and forth, and I go, God, just break against us or pay us, realistically. But when you're position trading and you're doing something off of, say, a 50 SMA, then you got to live with this stuff. You got to live with the noise. We could have taken 250 out of this thing and been done with it. Was that the best thing to do? Yeah, probably. For our position, that would have put us up 250 for the week. We could have rolled into Wednesday or Thursday feeling pretty good, but I feel like there's more money here. Tuesday's the time to take those risks if you're going to take them. It's twisting against us. It's twisted for us. It just is what it is. That's for sure. All right, let's go ahead and take a look at a few other markets. A news item. Iran war, I definitely wanted to cover this today. I'm not going to go off on a political tangent. I did that yesterday and really sort of illustrated the way forward here in the United States politically and what's likely to happen in the next 6 to 7 months. I'm not a pollster. I don't know for sure. I follow Polymarket odds. Polymarket's been pretty accurate. So I look at where people are actually betting money on what exactly is going to happen. And I think that we're in an interesting period here in the United States. No question about it. This political cycle is going to be a big deal. And it seems like every day the headlines are getting wilder and wilder. Trump's mental decline has us threatening allies. Mediators awaiting for Iran, Oman, Hormuz deal. Qatar says. Trump says no talks with Iran. He's not talking with them. Oil prices at highest level in July. As Fresh Strike reported on what? 2 hours ago. What is it? Fresh Strikes posted an image of the U.S. as a new territory. This was the headline, guys. Sorry, I got a little bit behind on my prep today, but you could see. I don't know where the image is. In any case, there was an image on the Truth Social, and it was pretty ridiculous. It shows the trade up. Yeah, here we go. Yeah, new U.S. territory, Strait of Hormuz. Strait of Hormuz now U.S. territory. That's pretty unbelievable. That's pretty unbelievable. I look at that and I say, okay, so what exactly did that do to our crude oil market? Well, it did a couple of things. That post came out right around 7 a.m. Eastern, just right around 7:15 a.m. Eastern, and you could see that it did drive crude oil prices higher. It drove crude oil prices higher. So the question now is, what happened when the U.S. Open came? The sellers came in mass, and then we saw a little bit of a rally here, but just an absolutely tough market to be trading. Absolutely tough market to be trading. No question about it. So when I'm looking at something like this, I'm saying, man, crude oil is just in an absolute logjam. $85 appears to be sort of the line in the sand for the bulls and the bears. This is where they're fighting it out. So if I was looking to trade WTI crude today, it would be something like a 85.05 is your point of control. And yeah, I mean, you probably are bidding that. Let's see. I think we just got to break south here in gold. Yeah, gold coming off a little bit now. Let's look at our 30-minute chart and see exactly how long we're willing to take a little bit of pain here. We're going to let this one develop for a little bit longer. I think we have an opportunity here. I really do, but we just got to wait and see. To me, this just feels like the market's flattening out. 30-minute got a little bit of rush. Got a little rush of a little bit of a rush of volume. Washed out some of the longs, some of the retail intraday longs like us. We're going to go ahead and stay the course and see what happens. As far as what we've got going here in WTI crude oil, this is a beautiful trade because the market's flat. You're in dead rotation. So today you're probably going to be looking at 3 units. You're going to be trading 3 contracts. It's a Tuesday. What would you want to do? Would you want to buy it right now? It's not a bad idea. We're trading the point of control. We're coming right down to 85. We could go long now and get away with it more than likely. Is it a good idea, though? Let's shoot them. Okay, right there. Where were we filled at? 85.07 is our long. We're going to look for something probably right up in there, maybe 85.14. Let's wait and see how this develops. We're trading right at the point of control for the time being. Coming off a little bit, but the market is absolutely flat, and there really is no catalysts in here for any sort of move. So I do believe that we will rotate back up to the top side of 85, but we've just got to wait and see how it pans out. Now, where would our stop loss be on a trade like this? This is where sort of the rubber hits the road. It's probably going to be right beneath 85. So if you're looking at something like this, you're saying, okay, we're trading 85.01 right now. Where should our stop loss be? Now, you notice I don't have a static stop loss in there. We're using mental stops right now. We have to know when we got to get out. Okay, right there we broke. We've got to let this one probably twist for another 20 seconds, and then we're just going to have to play it. We're getting hit. We're down about 10 ticks. We're beneath $85 right now. What's happening? We're rotating a little bit lower. We're testing the waters beneath 85, thinking that maybe we're going to get some traders to step up and sell this market off. Could it happen? 100% it could happen. Will it happen? More than likely not. We just got to wait and see exactly how this develops. You'll notice, excuse me, that we are being more patient with these trades. Man, I cannot speak. Hang on a second, guys. We are being more patient with these trades. The reason why is because the market is dead. It's flat. It's absolutely flat. And when it's flat, you oftentimes see markets range sort of in the center of their intraday ranges. That's exactly what we're watching right now with WTI crude. 85 is the point of control. It's the linchpin. It is the straw that stirs the drink. If we break beneath that, or excuse me, let me rephrase. It's going to take something very significant for us to break beneath that. So for me, I would put this one on and probably just let it sit for a little bit. Is it worth our risk? Looking for 85.14s? Well, I mean, you can look for 24s if you wanted. That's a little bit bigger trade, though. I mean, let's be brutally honest. That's a bigger trade. Is that what we want to do? Probably not. I would love it to be right down in here, maybe 14. We may even take a little bit less if it does rotate our way. 3 contracts is a significant position. And where's the volume going to come from? That's the other thing I would ask. This time of day, more than likely in the next hour or so, you're getting an influx of volume. But does it come right now? Maybe, maybe not. Maybe not. That's for sure. As far as our Strait of Hormuz, I did want to talk about this, and we'll get back to these trades. Looks like gold is back from the dead, right? It's back up to break even. This is pretty much a profound statement from Trump saying that this is going to be U.S. territory. What that suggests is it suggests that you're going to get a military strike. That's really what it suggests. That's what everybody's waiting for. We're all sitting around going, okay, if it's going to be U.S. territory, how exactly are you going to accomplish that? Well, I mean, there's a few ways to do it. there's a few ways to do it, but none of them are easy. Absolutely none of them are easy. That's for sure. So you just sort of have to wonder what exactly is going on behind the scenes. If there's no negotiations, you've got bomb Iran, you've got U.S. territory. I mean, what can we really say about the situation? Nobody knows. Nobody knows. All right, let's go back through our trades here real quick. Gold sort of back from the dead. These are very, very quiet markets. Crude oil is about 85.03. So we're just sort of milling around. Let's go ahead and wait a little while. See if we can get any satisfaction out of either one of those. Slow markets, though, typically dictate slow trades. So you just sort of go with it. As far as a couple other pairs, Euro USD, I haven't really reviewed many of the Forex majors lately, but we probably should do that. The bull flag for the Euro USD, this is exactly where we want to bid from down here, 113.55-ish. As far as what we have going on sort of a daily, you could call it a wave. I wouldn't really call it a wave. 62% right there at 115.50. I think that's a pretty good area to target for a long. Right now we're printing about 115.75 in the Euro USD. So what does that mean? It means the market doesn't know what we're doing. 115.75 or 115.50. I'm a bidder from 115.50. I'm probably nothing from 115.75. If you wanted to bid from here, probably not the worst thing that could ever happen, but you know, you sort of just have to be patient. That's for sure. Like we are with gold and crude oil. Let's go ahead and take a look at another major. U.S. dollar, Canadian dollar. We haven't really done much of this in the past several weeks. We've got a few levels that I would be moderately concerned with. Something like this. Weekly chart, not too bad. Do you have a trend going here? You got a bit of downward pressure. So spike high, spike low. You're going to be looking at something like this. $139.51, not a bad area. If you were going to consider potentially doing a short trade there, I think I would consider that one. That's not bad at all. We will have a trade idea out a little bit later today that I'll sort of focus on a little bit with a written piece, but this may be it. I love my weekly levels. I was telling the trader earlier today, I really like my weekly levels. I think that they are pretty darn good. They're pretty darn good, especially when they come into play in sort of a volatile market. When you get into a volatile type of a situation, you have an opportunity to make money, whereas flat markets like we're involved in right now with gold and crude oil, those things could take forever to work. I'm watching gold go down a little bit. Crude oil sort of back from the dead, but you know what really is going to happen here? This is slow trading, guys. This is slow afternoon, dog days of summer, August trading, where we have a very good chance to win these trades, but we have to be realistic about the time frames. That's for sure. Gold's starting to break down a little bit to 43.60, 62. Crude oil rotating back to the top side. Sort of is what it is. Very slow. This is the type of stuff that can really mess with you too. If you're trading big leverage, can really mess with you because you're like, I got to pull the plug on it when you really shouldn't pull the plug on it. You should sit around and wait and wait and wait. And that can be a real challenge, especially when you're just trying to make a little bit of money moving forward. That's for sure. All right, let's see. Gold trade, not the best symmetry for us. We're going to go ahead and let it twist, though, and wait a little bit. I do still like this formation to rally and rebound, but we could start threatening those lows. And if we do, we can't really be around. We can't hold on to it for that long. So we're going to have to start making maybe a tough decision there in gold. WTI crude's back up to about break even. Let's go ahead and take a look at the E-mini S&P 500 futures. Very slow. If you guys want to take another slow trade, we could probably take it. Probably bid it. Realistically, we're right at that point of control. Flat day. More than likely, you're going to be able to get away with a bid from there in the S&P 500, somewhere right around 77.23-ish. I mean, it's just really tight. It's just really tight. Really tight. So let's go to the E-mini Dow futures. What do you got right here? We can step up and sell those, looking for a quick scalp from the point of control, the POC. It's coming into perfect alignment with our 13-period EMA, which is a good thing for us. We could definitely take that trade right now and feel pretty good about it. Let's go ahead here. Let's see, we want to sell. That's going to be a sell limit order. Right in there. Let's go ahead and sell it. See what happens. Take profit, probably going to be a little more conservative. Somewhere probably right down in here. And we'll manage it on the fly and see what happens. Looks like our gold trade is still flirting with us. Goes down a little bit and then bounces. WTI crude right around break even, 85.03. We're down a few bucks. We'll wait and see how that probably develops here in the next hour or so. You got about another premium hour of trading for WTI crude. The key is just when to pull the plug. Right now we're down a little bit there, but we'll wait and see. This is sort of an interesting sell, though, for the E-mini Dow. I was asked the question earlier if trading the Dow 30 or the E-mini Dow was a pretty good way to trade. And I say, yeah. I mean, the way that I look at it is, if you're trading all Forex pairs, or you're trading all US dollar pairs, or you're trading all commodities, or all stocks, you're not really taking advantage of the diversification. See, we have the advantage. We can trade anything we want in these markets. We have market access. We have access to pretty much everything. And that can be a really good thing. That can be a really good thing for us. It gives us the ability to sort of spread out our weapons, or spread out our gunpowder. If we want to trade some equities, we trade equities. We want to trade some currencies, we trade currencies. Commodities, we trade commodities. The beauty of being a retail trader is, I don't work for Shell Oil. I don't have to just trade oil. I don't have to just trade natural gas. I can do whatever I want. So I always recommend finding, if you're ready, number one, start with one or two assets and just get really good at them. Number two, when you're ready to diversify, find assets that are not correlated. So you're looking at equities, you're looking at indices, you're looking at currencies. Find them that aren't correlated. Okay, finally something's happening. Okay, here's a break potentially in our favor in WTI crude. We're back up to break even. This has been a nightmare long trade. Our gold trade, nothing's happening. We're down a little bit there. Are we going to get any love to the top side? Maybe we're going to get a little bit of a sweep. Sweep us up there to 14 so we get the hell out of there. They take a profit. As far as what I always recommend, though, is if you're a trader and you're saying, okay, I like trading currencies, but I need something else to trade. I need to try to boost my profitability. That's okay. Think about commodities. Think about indices. Essentially, we're sort of trading WTI crude because it has a mind of its own right now. That's all about Iran. That's all about the Middle East and geopolitics right now. That's what WTI crude's about. Nothing else. Strength of the dollar isn't doing much to impact it. Traditional market forces like we see, risk on, reverse risk off, sentiment, not necessarily doing anything. This is all about the Middle East. So that in itself is its own asset. Gold is definitely looking at the US dollar, no question about it. That inverse correlation, you see the dollar sort of holding its value and coming off a little bit here. Essentially, that's what you're looking at. Very, very tight, though. Very tight. The YM, the E-mini Dow, E-mini Dow has a mind of its own. You'll notice that it doesn't always march in lockstep with the S&P 500 or the NASDAQ. That's interesting to me. So theoretically, we have three things that are completely uncorrelated. We got crude oil, we've got gold, and we've got the Dow. That's what I would call diversification. All right, something happened for us finally. Yay. So we got a little bit of a break there in WTI crude. Do we take the money? Do we let it twist? Just let it go at this point. Gold's starting to get away from us, though, down to about 43.61. I don't like the way that looks at all. But crude oil, just a flat market rotating back down to that point of control. You'll notice that in these situations, the 1-minute chart is almost next to useless because it's so choppy. But this right here pretty much is the tail. You'll notice at that point of control, there is no question about it. Right at 85. I would much rather be long than short right now. No question. No question in my mind. Now, as far as gold goes, we are fighting a little bit of intraday pressure. I would be surprised if we don't bounce and rally there, but now we're trading 43.60. Starting to get away. We're at break even here. Do we even have a chance of getting the E-mini Dow? We're a ways off still from that point of control. Let me see Sean Evans. Good to see you, Sean. Welcome. We're going to hang out and watch these trades for a little while longer. Any questions you may have at all are more than welcome. If you have a market that you'd like me to look at, I'm more than happy to do that as well. Right here, back to our dollar CAD level, though. I really like 139.51. Bitcoin. I was watching, let's see, what are we down here? Down about 580, 590, something like that. All right, well, we just got to let it go. It's Tuesday. If we're going to take a loss, it's today. Something like this, though, Bitcoin, absolutely fascinating because I was pointing this chart out earlier on X. And there was a household name, a very famous guy that
goes on and on about Bitcoin every day. It's a big gold bug. But we start looking at this type of formation right here. And I told him, I pulled up the yearly chart and I said, hey, listen, from this rally that began back in 2023 up to that top right there, and then we came down to about, 62%, 57.08. He said that the top side resistance is present at 65, and I go, no, it's not. It's present up there at about 70. So I would say you're trading between 70 and 60 in Bitcoin. That's going to be one of those areas that you need to be focused on probably for the rest of the year, because that is where the breakout is going to come from. That's where the breakout's going to come from. No question about it. So for us, the real thing is, how do we trade Bitcoin right now? And the answer is, it's going to be really hard. It's going to be really hard because you're pulling up these daily ranges and there's just nothing there to write home about. It's ridiculous. There's nothing there to write home about. Spike high, spike low, spike high, spike low. You've got rotation right in these zones. What do you do? I mean, we could try to sell. I mean, according to this gentleman, 65 is significant resistance. And I go, not really. It really isn't. This area right down in here, is this support? No. Support is down here at this year's low, right at our 62% retracement, 57.8, 58, 58 and a quarter. That's support. That's a good buy for Bitcoin. What's a good sell for Bitcoin? It's not 65. Take a look at our market dynamic here. That's where the chain gets thin. That's where the game gets interesting right there. We want to see a nice break above 65 so we can maybe sell 70s. So we can maybe buy down here, buy 58s, something like that. That'd be a fantastic way to approach this market. As far as I'm concerned, right now, Bitcoin's a no-fly zone. No-fly zone. Let me see. Babgees, do you hedge your trades? No, I don't. I'm one way on these. We're seeing gold. The gold is sort of coming off just a little bit. I mean, this may be a situation where we get shaken out of it. I want to see how the market develops in about the next 13 minutes. And then we'll probably be putting our stop loss beneath that 4-hour bar. What we don't want to do is we don't want to bail on a good trade from a huge long-term technical level. That 50-period SMA on the 4-hour chart is a big deal. However, if we get a 4-hour close beneath there, we have to respect it and understand that we may just not have enough money to hold the position. So no, I don't hedge it. So what I'm saying is I'm not long here on gold and then short in another account. But the market is falling away, and we're starting to really get hit and really bleed now. So remember, everything I do here is demo dollars. We're talking about 1 to 3% of your account, maybe 5% if you're adventurous. But right now we're trading at 85 for WTI crude. Once we turn over to the hour here, we'll probably get the verdict on these trades. We're trading down just a little bit on WTI crude, right around 84.98. I don't know that we're going to get a shot at this trade here. This Dow trade. Maybe, maybe not. This one starting to break and get a little bit ugly on us, down about 7 hundo. Remember, our whole thesis for being in this trade, though, is a higher time frame. So something like that. You got 1140 left in this 4-hour chart. Are you going to get a close under there? It's possible. That's a 50-period SMA. That's a 50-period SMA for your gold plays. Excuse me. Typically, very, very nice, very, very nice area of either support or resistance, things like that. Even our intraday, that's a big sweep there in a news event. But you can see this stuff here, typically pretty good. But right now, gold's coming off, no question about it. Coming off in sort of a big way. If you're on an intraday basis, trading this sort of on one of these type of trades, you've got to be out right there. So it looks to me like we're going to break and probably run the day's lows. Probably happens right now. Then after that, where do we go? May still go lower. May rebound. Personally, I don't think much has happened. We got in at 65. We're looking for at least 75 to the top side. Maybe we could extend our profit target, but right now we just got to wait and see. It hasn't really gone well. I mean, you can see there's the big negative moves. There's sort of your bullish, not necessarily a bullish stand, but the bidders made a stand right there, right around 65. We're still very much in the game, but not really my type of trading, that's for sure, but we're in it now. Let's see. SMA is right there at about 43.64.82. So we do need to see a rebound here in the next 10 minutes or so, or we'll start thinking about moving towards the door. Moving towards the door, that's for sure. Not much going on in WTI, still right around 85 even. Doesn't surprise me at all. 30-minute chart, there's your point of control. Starting to spray a little bit to the downside. This would be one we wouldn't mind probably pulling the trigger on and getting out. Down 330. Have we really lost the hold on 85 yet, though? No, not really. 390 coming off a little bit. How about right here? 1-minute chart. Does it show you anything? Very choppy in here. We almost were filled up. How about this down in here? Low volumes. Extremely low volumes. Remember, low volumes mean that there's not much happening. It means that the price action is suspect. Let's check something out here real quick. Check our news feed. Yeah, so we're looking at rollover. So we're actually trading the rear month contract, which you never want to do. You never want to do that. We've actually rolled, if you want to take a look at WTI crude oil, from SEPI to OC, which is fine. I mean, you can still do business back here. The reason why we ended up doing that is because your CFD, your U.S. oil CFD, looks like it just rolled to SEPI in the last several hours. So interesting dynamic there in WTI crude. Probably the best thing to do is to pull that trade right now and just get out of it. You'll notice that October crude is trading right around, these are delayed, but 84.19, somewhere in there, and 85.06. But you can see that we're just trading an extremely thin market. 85 is going to be the big deal, though. Right now, you can see 85 is definitely a catalyst here for participation. We're at 85 right now, so you got a situation there where you just can't really break the stalemate. OC, though, if you look at October WTI, you're trading down there right around 84.19. So some of the powers that be are expecting a little bit of relief from these high oil prices in the coming months. Be that as it may, I mean, who knows what's going to happen. We are watching 85 closely, though. In my view, these are the reason why you could actually think about trading this is because it's coming up on delivery. And what that means is that a lot of the institutional players are going to take delivery. They're going to assume delivery on this contract because it is the current market price that you would be looking at assuming a barrel of oil today. So if you're looking at 85 is a big deal. As far as what could we be doing from a scalping perspective, probably should just be getting out of these trades at this point. I'm looking for the door. I want to hang on for another 7 minutes or so. Don't really know if I have the voice to do it, but I definitely want to be looking somewhere, excuse me, something like that. We could extend and make this a bigger trade. I don't really recommend doing that because we are trading the thinner issue. I would keep this somewhere right up in here, somewhere right up in 14 to 17. As far as trading the rear month contract, I don't recommend it just because it's so thin. But there's people taking delivery, and there's a lot of folks lining up delivery, and it wouldn't shock me if you see a ton of participation from 85 to the top side, just folks that want to lock in and get really dialed in for their to meet their oil quotas, essentially. Let me ask you this. If you're an institutional trader right now, and you're, of course, we're looking at our futures trades. We're saying, okay, OC's 159, 159,000. It's trading 84. Do I believe that crude oil is going to be worth $84 a month from now? Or do I want to lock in maybe a decent supply right around 85 and sort of hedge my bets? It's an interesting question. It really is. Do you see a big rush of institutions come in and try to take delivery right now? You probably could. You could see it. So in order to take delivery, that means they would have to buy new contracts. Is that going to happen right now today? I don't know that. I know we're trading an extremely thin market, and I know that we've got a decent entry point at 85.07. I do like it. But as far as should we stay in this one any longer, I want to see the clock turn here. It's in 6 minutes. That's going to give us a pretty good idea of potentially what we need to do. My gut right now is telling me, you probably should have this one on a real short leash. Don't let it explode to the downside. We're trading right between the point of control and the lower value area. If you do break beneath value, you probably have to get out. It's going to be interesting. Interesting close to the day. Could be a real bad Tuesday. This right here, we would have loved to have got this one. Point of control's moved, so pull that. You can see doing all the other trades, we missed that one. That was a pretty good one to the downside. So moving forward, how would I manage these trades going into this weekend? Or not this weekend, but later in the session after we sign off here in about 10 minutes or so. How would I manage this? For me, the gold trade's going to be pretty easy. Stop loss is going to be juiced in right down there. They're going to say, Shane, that's a big risk. And I'm going to say, yeah, it is. If you're going to do that, you've got to be looking to get at least, what the hell's that? Excuse me, I got another one. You're going to have to do something like that, potentially, to make it worth your while. It's got to be at least a 1-to-1. At least a 1-to-1. That's got to be the name of the game for you. So this is dynamic trade management. Where are we vulnerable right now? We're vulnerable if this market keeps going. If this thing goes down and wipes us out, we just dump 1,700, and it can happen. It can happen fast. Right now, I feel like we're a little bit on the wrong end of it, but averages tend to average. Is the worst of it over? Personally, I think so, but we're coming off. My point is this. You've got to draw the line in the sand somewhere, and you can't hold these things forever. Right now, that's about, what, $1,000? $830. We're going to let this one complete right down in here. Something like that. So realistically, we'd be looking at 43.86 to the top side. Right now, we're trading 43.57. More than likely, if we're going to win this trade, it's going to happen during the Asia session. What's your take on negative risk versus reward? I hate it. Can't do it. Unless we're scalping, unless we're tick scalping BabGs, you can't do it. So right here, I'm sort of waiting. I don't want to get swept out here in the next 3 minutes, but I know exactly where our stop loss needs to be. It needs to be probably right down in there. And with that spread, so we want to be right 47. Let's go right there, 47.25, and then we'll tighten it up here in a minute. I don't like playing negative risk versus rewards because you have to win an extraordinary, and I mean an extraordinary amount of the time. You really do. You really do. So right now we're looking at an unrealized P&L of about 1,000. It's not good. Is today the day to do it? Yep. Absolutely. Got about 3 minutes till the top of the hour, 2 minutes till the top of the hour. This is what I want to see, especially on a WTI. Trading right at 85, 84.98. We probably could just exit that trade. We'll see what happens. You have to apologize. My voice is a little bit raw. If there's any questions at all. The thing about negative risk versus reward, Bab, is you've got to hit an extraordinary rate. So you start laying, let's say, you're going to risk 10 pips to win 5 picks. That's the problem sort of with that piranha strategy. That's the problem with that one is you risk 10 to win 5. You're going to have to win 70% of the time. You really are. Is that attainable over the long term? Yeah, maybe not. Depends on your strategy. But for me, the negative risk versus reward really puts the pressure on you. I like 1-to-1. That's my sweet spot. All right, WTI crude has broken to the downside, so we're taking it on the chin there. 84.92-ish, something like that. Coming up the top of the hour. Got about 30 minutes left of premium trading. Let me see, Bab. I'm usually tempted to take it when catching a move that has already left. Yeah, you want to get in on it, but it's hard. 84.90 in WTI. We're going to get run out of that trade, it looks like. Buy the ticket, take the ride. That's the way it is. Okay, there's your break. Coming up on K period. Very, very low volume, low liquidities. Tough trading. We will have to pull a Band-Aid here in a second, though, on this. No question. I'm not going to be around for a late-day dump. 11:59 my time. Okay, there's the 2 p.m. Eastern. Are we back from the dead or are we going to tank? That's the question. You will get a big rush of participation in the WTI markets here in about 25 minutes. That's pretty much when these things are going to get balanced. Very slow, though. Very slow. 84.95. I just feel so unsatisfied. This thing hasn't done anything. We're looking for that big bullish move. So right here, you'll probably be looking for a close up around 84.25. I think we're going to have to pull the plug on this one and take the hit. Traded beneath J period. We're in K period right now, so we just broke beneath J. Are we going to rotate back to the top side? Right? A lot of times you see that. We rotate back to the point of control. Does it happen? I mean, there's sort of, that may be as good as it gets for us. 84.93, 84.94. No real buyers in the market. Beneath 85. Is it tough? It's tough sledding. All right, our gold trade should be set up right here. That's pretty much essentially where we're going to have to put it. The 4-hour low is going to be right there at about 43.51. I'm going to go ahead and let that one sit. That stop loss is going to sit right around 43.46. And then we're going to be looking for a bit of love to the top side. I want to see this retracement back up to about 43.86. I got to tell you, this did not go very well for us, but we're not dead yet. We're not out of the market just yet. As far as what I would be looking to do for the rest of the day, if this was a position trade, we're going to go ahead and let this one spin and see what happens. I'll go ahead and update it. Believe me, I don't run from losers. Today we're getting hit a little bit. That's just sort of the way it is in slow markets. But this one right here, still have a chance, fighting chance. So I'll update the results of this trade on X, and then we'll do our little board and everything accordingly. On tomorrow, we'll recap some of these trades and how they panned out. This one right here for WTI crude oil, the trade's really simple. Your stop loss, I'm going to have to pull a Band-Aid off down here probably. I don't want to pull it off yet because a lot of times you see this price action where you get a reversal on the end of the day. So I do believe that that's possible. Probably looking for like 85.25. But if we trade down, if we start looking at like 84, 89s, maybe 80, I mean, we're just a few ticks off of that, but maybe 84.74, something like that, then we're just going to have to exit stage left and take the hit. Sort of the way that it is sometimes on a Tuesday. This is when we take risk. All right, everybody, my voice is done. Trades undecided at this point. I do think that we're going to be taking a loss on that crude oil trade, though. I'm going to watch that twist the rest of the session. As far as gold goes, still like that one a little bit. Got a puncher's chance. We just got to get some bidders. All right, everybody, I'm going to sign off. I want to thank you for joining me today. We'll be back tomorrow with FOMC Live. We'll go ahead and trade some of those, or FOMC Minutes, excuse me. I'll go through the minutes, give you some expectations, then we'll have an opportunity potentially to make a few trades, and I will answer any and all questions. All right, I'm officially Barry White. My voice is gone. Have a fantastic trading session. I will update these trades later today when they pan out. Excuse me. It'll be in the How to Trade trading room or on X. All right, guys, that's a wrap. Have a fantastic session. And as always, trade the action well, and we'll talk soon. See ya.